Growing older is often portrayed as entering a golden era of life, a time meant for rest, reflection, and the enjoyment of years of hard work. Yet for many seniors, this phase brings not peace but financial worry. While wisdom, endurance, and life experience are valuable gifts that age bestows, financial strain can overshadow those gifts, turning daily life into a quiet struggle. Across the globe, millions of older adults face economic instability. Research shows that a large number of seniors either have very little savings or none at all. Retirement, once imagined as a time of comfort and calm, too often becomes a period of anxiety and uncertainty. Instead of embracing stability, many are left asking difficult questions. Will my savings last? Can I cover my medical bills? What if I become a financial burden to my family? These questions reveal the delicate balance between aging with grace and struggling in silence. Money challenges in later life are not only about numbers in a bank account, they affect every dimension of well-being. Financial stress weakens physical health, strains family ties, and fuels emotional distress. Many seniors wrestle not only with financial limitations but also with internal fears, often too embarrassed to talk about their struggles. As a result, they suffer quietly. This issue is made worse by the fact that people now live longer than previous generations. While longevity is a gift, it also stretches financial resources over more years. Advances in medicine may add time to life, but they also add expenses. Social support systems such as pensions or government benefits frequently fail to keep up with actual living costs, leaving seniors trapped between limited income and growing expenses. Compounding the problem is how society often treats its aging population. Many seniors become victims of scams, predatory financial schemes, or even manipulation from people they trust. The rapid pace of technology also leaves many feeling unprepared to navigate digital systems, exposing them to new forms of fraud. In exploring the financial realities of aging, the goal is not to spread despair but to bring awareness. Each challenge carries within it a lesson and opportunity to apply wisdom, compassion, and practical action. Only by acknowledging these truths can families, communities, and policymakers create meaningful solutions that restore dignity and hope to aging lives. Because the later years of life should not be about mere survival, they should be filled with peace, purpose, and the quiet satisfaction of a life well lived. For decades, people believed that disciplined saving and a steady pension would ensure a secure retirement, but many reach their senior years only to find a painful gap between what they have saved and what life actually costs. Several factors contribute to this shortfall. Wage growth has lagged behind inflation, making it difficult for working adults to save enough during their prime earning years. Housing, healthcare, and caregiving costs have soared far faster than general inflation, shrinking the real value of savings. Economic downturns that occur near retirement can devastate portfolios, while traditional pensions have become rare. Now, individuals bear the full burden of investment risk, often without adequate knowledge or stability to manage it effectively. Life events also play a major role: job loss, illness, caring for family members, divorce, or long breaks from work all reduce long-term savings. Longer lifespans, though a blessing, mean that money must now last 20 or 30 years rather than 10 or 15. The outcome is a growing population of seniors forced into difficult trade-offs, say postponing medical care, abruptly downsizing homes, or returning to part-time work. Recognizing these structural challenges is essential for building realistic plans and restoring security and dignity in later life. Inflation quietly eats away at the real value of fixed income, as prices for groceries, transportation, utilities, and rent rise. The same pension check buys less each month. Medical inflation is even worse. Prescription drugs, doctor visits, and long-term care grow increasingly unaffordable. Housing compounds the pressure. Property taxes, insurance, and maintenance all increase steadily, while surprise repairs can quickly drain limited funds. Seniors on fixed incomes must often cut corners, rationing heating and cooling, skipping social activities, and postponing preventive health care. Such compromises can lead to declining health, which in turn drives expenses even higher. Inflation shocks, whether after a recession or global crisis, can end years of careful financial planning in a matter of months. Defensive strategies become essential, tracking expenses rigorously, negotiating insurance and service costs, choosing generic medications, considering smaller living spaces, and maintaining an emergency cushion to preserve purchasing power. Perhaps the most haunting fear among seniors is outliving their savings. What was once imagined as a tranquil retirement can become a time of constant financial anxiety. As life expectancy continues to rise, many people now live well into their late 80s or 90s, far longer than traditional retirement plans anticipated. This gift of longevity often collides with the hard limits of personal savings. The fear of running out of money extends beyond finances. It affects mental health, leading to hesitation, guilt, and self-denial. Many seniors avoid spending on things that bring joy, travel, hobbies, or even necessary health care, out of fear they will need that money later. The result is a life lived cautiously, sometimes joylessly. While the clock continues to tick, behind the financial worries lies something deeper, a fear of dependency. No one wants to feel like a burden to their children or rely on others for survival. These emotions can lead to isolation, sleepless nights, and even depression. The key lies not in denial but in preparation. Developing long-term strategies such as delayed retirement, supplemental income sources, annuities, and community-based support networks. Financial instability also touches emotional and social well-being. When resources run low, self-esteem can collapse. Seniors who once supported their families may now feel ashamed to ask for help. Social lives shrink as outings and hobbies become unaffordable, and the isolation that follows deepens loneliness. This emotional erosion often has a more severe impact than the financial stress itself. However, there are paths to renewal. Downsizing to smaller, more affordable housing or relocating to less expensive areas can greatly reduce costs. Many retirees also find purpose and additional income through part-time or freelance work. Even a few hours of weekly work not only help financially but also restore a sense of control and engagement. Community and family play vital roles too. Honest discussions about financial challenges can reduce shame and foster collective problem solving. Government and non-profit programs, from meal assistance to transportation and healthcare subsidies, can help bridge gaps. Seeking advice from professionals who specialize in senior financial planning often uncovers creative solutions. Health expenses, however, remain one of the most relentless challenges. Even in countries with public health care systems, retirees discover that many essential needs, dental care, vision services, hearing aids, and long-term care, are only partially covered. These costs can devour a large share of fixed incomes, leaving little room for anything else. Unexpected illness, surgeries, or chronic conditions can trigger financial crises overnight. Because people are living longer, they face more years of potential illness, compounding the burden. Insurance plans rarely cover everything. High deductibles, copays, and exclusions often leave seniors responsible for thousands of dollars out of pocket. The result is painful choices. Should one pay for medication or rent, hire a caregiver, or risk independence? The mismatch between available coverage and real-world needs is one of the greatest threats to retirement security. Long-term care is perhaps the most underestimated expense of all. Help with bathing, dressing, and mobility can cost thousands monthly, whether at home or in assisted living. Many families step in to provide unpaid care, sacrificing their own financial stability and emotional well-being in the process. Without early planning, such costs can destroy savings and relationships alike. Preparing for long-term care through insurance, savings, or family agreements is not a luxury, it is an act of foresight and love. The financial weight of healthcare doesn't just affect seniors, it ripples through entire families. Adult children often reduce work hours or quit jobs to care for parents, leading to lost income and stress. Disagreements about money, time, and responsibility can fracture family unity. Structured caregiving plans, shared budgets, and open communication can prevent resentment and burnout. As money increasingly moves online, seniors face new dangers. Scammers exploit their trust through fake calls, emails, and websites. Romance scams, fake tech support, and fraudulent investments drain billions annually. Yet the most painful form of financial abuse often comes from within a family members, caregivers, or friends misusing trust for personal gain. These betrayals cut deeply, inflicting both financial and emotional wounds. Recognizing warning signs, the unexplained withdrawals, sudden changes in wills, or isolation from loved ones, they can save both assets and dignity. To guard against fraud, seniors must combine practical measures with education and strong social connections. Secure passwords, two-factor authentication, and automatic alerts can stop theft early. Learning about scams from community programs or tech-savvy relatives builds confidence. Families can monitor accounts jointly while preserving independence. Transparency, vigilance, and communication are the best defenses against financial exploitation. Rising living costs intensify the struggle. Pensions and benefits that once covered comfortable living now barely stretch to meet essentials. Housing, utilities, and groceries climb steadily, while fixed incomes stay stagnant. Many seniors resort to cutting meals or skipping medications just to keep up. The result is declining health and eroded dignity. Solutions exist, though imperfect, from moving to lower-cost communities to using public support programs and advocacy for policy change. Budgeting carefully, embracing simpler lifestyles, and relying on community resources can all make a difference. Debt has also become an unexpected burden for many retirees. Mortgages, credit card balances, medical bills, and loans taken for children's education often linger well into old age. With fixed income and rising interest rates, even small debts can grow overwhelming. Yet debt does not have to define one's final years. Through counseling, consolidation, and open family discussions, seniors can regain control and rebuild peace of mind. In the end, the financial realities of aging remind us of one essential truth: aging is not merely a biological journey but a financial one. These challenges, while heavy, reveal the deep resilience of older generations. They have weathered storms before and carry the wisdom to adapt again. True security in later life is not just about money, it is about peace, purpose, and connection. The golden years should never be a battle for survival. With awareness, compassion, and collective responsibility, they can still shine with the light of dignity, stability, and fulfillment. Aging gracefully requires courage, but no one must face it alone. Society, families, and individuals must walk this path together, ensuring that every senior's final chapter is one written in peace, respect, and hope.